Here's a quick walkthrough of my most recent Tuesday trade on Schwab Network, a earnings-based trade on Visa, a call calendar spread trade where some nice term structure volatility edge set up for a nice return. So let's jump in and take a look. First of all, here is the actual trade ID, as you can see. And I appear every week Tuesday at a little after 10 Eastern time. So going out and buying the November 8th expiration, slightly out of the money, 292.50 calls, selling this week's right with the earnings in it, 292.50 calls, paying 135. We'll see in a second. I actually got in a little bit better on the trade. For those who want to go to YouTube, you can click on this link here and it'll take you to it. It's also posted on the VIP dashboard as well. But you can see Visa reports earnings after the close today. That was October 29th. Market was pricing in about a 4% earnings move, and that's based on that November 1st at the money straddle, right? Adjusted for, in essence, a little bit of time decay. Overhead resistance on the chart and a triple top at the 292 level, and the shares have pulled back, but now are back above that 20-day moving average. So kind of like the trade here to challenge that 292.50 level once again. So again, buying to open next week's 292.5 calls, selling against it this week's 292.5 calls, which have a much higher implied volatility, much richer option premium. Paying $1.35, actually got in about a dime cheaper for most people. We're buying a 30 IV next week, selling over a 40 IV this week, so a nice term structure of vol edge, right? Selling a much higher implied volatility level. And that short strike that we're choosing, the trade structure, is right at resistance at 292.50 level and the upper expected move boundary, about 4% higher from where Visa was trading at when the trade alert came out. So we can see that earnings expected to be for Visa about 260 a share, certainly better than last year, announcing after the market closed on October 29th. We can see the actual fills. I just pulled off one of them here. You can see getting in at $1.23, right, buying next week's 292.50 calls, selling this week's 292.50 calls for a 123 net debit, so certainly lower than 135. About 6 deltas net long, buying a 31 delta, selling a 25 delta, so net 6 deltas long, so slightly bullish. Here's the key, right? Over a 10-point term structure volatility edge. Term structure vol is simply the difference between the option we're selling trading over a 40 IV, right, the November 1st expiration, and the option that we're buying trading at about a 30 IV. We can see the following day, right, the stock reported earnings that beat out the top and bottom line. Stock trading right near that ideal 292.50 level. That term structure volatility has flattened as well. So I said, let's grab the nice gain on the trade, right? It worked out very well, right? We have the stock move advantageously. And as always, term structure volatility per almost every earnings report plans out. So we're selling that spread for a $2 net credit with a dime discretion. Again, getting filled better. Here's a 210 fill up here, right? Here's a 220 fill, and these were right after the alert to close out came out. More importantly, that term structure volatility, right, has flattened considerably with the November 1st IV, just a touch above the November 8th. Now, remember, when we put the trade on, it was about a 10 IV differential. Now you're looking at about 1.5 IV points. So certainly has flattened out. So our entry at $1.30, although most people got in much better than that. Exit 205, most people got out much better than that. For a nice gain overnight, one-day trade of 75 cents, right? Or about 58%. And again, most people probably did a touch better on that. You can see by the close here, I pulled it off. That spread actually closed even higher at about a 240 net credit, went out 246 midpoint. You can see that term structure vol is actually flipped where the November 1st options are trading slightly lower than those November 8 options. So that term structure volatility post earnings, you can almost, rely on it flattening out once earnings are released, once the unknown becomes known. So that's kind of the edge on it. Then you want to go out and pick the trade structure that works best on it. And you can see on the chart V's, as I said, that 290, 250 level here certainly was something that was overhead resistance. Once again, kind of held right up to there. You can see the stock was going in a decided uptrend, continues to held that 20-day moving average. So trade worked out very nicely. So hopefully provides insight into kind of the Tuesday trades that you'll see being posted here. Schwab gives me the topic, then I come up with a trade based on usually earnings and what I would do on it. So until next time, as always, here's the good trading.